But what's really at stake for the stock right now is really how well the company is able to pivot from being just a vehicle producer into being an autonomous vehicle producer.
Full year estimates, I guess we can say goodbye to some two handles, right?
I think that's a given.
Patience is wearing thin. This was, probably one of the more frustrating periods we've seen for investors in years.
And so now it's somewhat not existential, but it's like, how are they going to compete now in this very competitive market?
I was just stunned today. I think that this caught me off guard.
All that and more. So let's get to it. Surprise, surprise. Tesla stock is down in the pre-market, sitting at 164.80. Just for reference, know that Tesla is down almost 35% year to date. Just keep that in mind.
We're awaiting the latest delivery numbers from Tesla. In the meantime, let's bring in Colin Rush, Oppenheimer Senior Research Analyst. Colin, we've seen it so many times. The expectations and the stock are reflecting probably much different delivery numbers than shareholders had hoped for 6 months ago. Is it already in the stock and in the expectations? Are they lowered enough?
The street numbers I don't think are low enough. We're about 15,000 below the street.
Did he say 15,000 or 50,000? Either way, Tesla missed by a huge number.
But what's really at stake for the stock right now is really how well the company is able to pivot from being just a vehicle producer into being an autonomous vehicle producer and really embracing the AI potential of the platform. This FSD rollout that they're doing with this 1 month trial, I think is going to be very instructive in terms of how the stock actually performs over the next 12 to 18 months.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother. Right. They're going to sell millions upon millions of cars here in the future, but the trillion-dollar question is, when will these things be fully autonomous?
We got the Tesla numbers. Should we do?
Yeah, I was just, the stock's down 6%.
Stock's down. Let's go. All right, Phil's got the numbers for us as well. You want to just do that? What do you think, Jim? I want to check with you first.
Phil, please.
Phil, take it away. Give us those Tesla numbers.
These are not good, David. That's why the stock is down. Deliveries in the first quarter of 387,000 vehicles.
Damn, that's low. Never in my wildest dreams would I have thought that they would be below 400,000, but here we are today.
Let me put that into some perspective. The FactSet consensus as of Friday, and it had been coming down, was for 457,000 vehicles to be delivered. First quarter of last year, the company delivered 422,000. So this is a year-over-year decline, the first since 2020 that we've seen from Tesla. And in terms of production, the company produced 433,000 vehicles. They do point out the fact that they had the change in the ramp up in production in Fremont as they come up with the new Model 3 Highland edition. They also had the Red Sea issue, also the issue with production at the Gigafactory in Berlin. Not said by the company, but clearly one of the main factors, guys, what's happening in China. And we know what's happening there as they have lowered their production, and we've seen the announcements or the reports come out of China, and that clearly has an impact here. That's why the stock is under the pressure that you're seeing right now. Again, 387,000 vehicles delivered in the first quarter. The street was expecting 457. Even some of the bearish analysts were expecting, 410, 415, not 387.
Full year estimates, I guess we can say goodbye to some two handles, right?
I think that's a given. I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that? That possibility is out there, but it's early, and a lot of things can change.
Yeah, I'm not ready to rewrite my models just yet. Got a long way to go for 2024. Either way, I think 1.7 million, which is the figure I use in my bear case, should be good still.
What's the strategy for Tesla going forward now? I mean, it's raising prices in China while its competitors are cutting. How's this going to pan out?
Look, I think that's been the problem. I mean, it's been an epic disaster, not just in terms of the delivery number, but the strategy. Are you going to cut prices, hold margins? And investors right now are feeling blindfolded, almost like playing darts, blindfolded. And these were, look, no one was expecting a good quarter, but this was pick your horror show, Friday the 13th, Nightmare on Elm Street. That's what this quarter was.
What? Why is this so sensational? Even in a perfect world, there's no scenario where this goes straight up. Now, I get it. They came in well below the street expectations, but there's a myriad of factors that go into that 387 number. How many of these vehicles are in transit? Going into Q2, analysts are going to have very, very low expectations for Tesla, under the crazy notion that nobody wants a Tesla anymore. Now, I don't think Tesla's going to get back to capacity, not by any stretch, but they will be significantly higher than 387. My best guess is that they're going to be somewhere around 430 or so. But that's all that is a guess of what's going to happen 3 months from now. The trials and tribulations that Tesla is going to have to face between now and then, who knows what they're going to be. But despite all of the sensational noise coming from Dan Ives, I'm not panicking.
And the problem is it's a little dog ate the homework. I mean, the supply is not the issue here. It's really demand softening. And I think for Tesla, this is a fork in the road period in terms of what they're going to do from price perspective, new models over the next few years, advertising, competition's increasing, demand soften, not just in China but globally. This is probably one of the more challenging periods I think that we've seen from Musk and Tesla in the last 4 or 5 years. Now you need to be a pilot on the plane, navigate Tesla through what's right now a Category 5 storm.
Dan, are you still constructive then when it comes to the stock?
Yeah, look, we're bullish for the long term on the other side of this, and obviously been, bull for many years. But you got to call like you see it. They need to get through this period to see that growth, to see the margin, to see the potential. Otherwise, there could be some darker days ahead. And that's why this is, I view this as really a key chapter for Musk. It's in terms of which way he navigates. Patience is wearing thin. This was, probably one of the more frustrating periods we've seen for investors in years.
Speak for yourself. I love this buying opportunity presented right now. We're at peak fear. Is Tesla the company that we thought they were? And while some investors are wavering, I'm reloading. Just think about it for a second. He hates what's going on right now so much that he's questioning the leadership of what got us here. And throughout all of this sensationalism is still a long-term bull. He knows that they will get through this. Well, if that's the case, come out and say what it really is. An incredible buying opportunity for anyone that sees the long-term vision.
The company said the drop in volume was a result of its manufacturing ramp of its updated Model 3, as well as the Red Sea conflict and the arson attack at its Berlin Gigafactory. However, Tesla did deploy around 4,000 megawatt hours of energy storage in its first quarter. Tesla also stole the crown back from its biggest competition overseas, BYD, selling about 28% more EVs comparatively. That means Tesla is now back on top as the largest battery electric vehicle manufacturer in the world.
Oh, so there is some positives that came out of the quarter. You wouldn't think so listening to our friend Dan Ives. The energy division. Can't wait to see that broken down in the financial report this quarter. And despite the horrible miss, I think Tesla sold the most battery electric vehicles this quarter. And that's with competing with BYD's cheaper models over there. Tesla's vehicles are expensive. Just wait until they get into that cheaper segment.
Your expectations for this number were to the downside, a disappointment, and then I think, correct me if I'm wrong, the final number was even lower. So what do these numbers mean to you?
It was a big downside disappointment for me. The numbers, I'm not a fan of the issue of these delivery numbers being so important, because I'm a long-term investor in Tesla. I have a scenario that shows there are multiple different businesses coming to fruition, particularly the energy business and in addition, the Optimus business. So for me, the quarterly results are not as important as the trends and where they're going. So we're seeing, the introduction of a new model in Fremont, the refreshed Model 3, just beginning to crank up. So we don't have production from there. We see the Cybertruck just beginning to get underway, and that's been a very promising launch, by the way. So I expect that we're going to see 100,000 Cybertrucks delivered this year.
Ooh, that's a little higher than I got, but I gotta love the optimism. And he's absolutely right. Fremont has been shut down trying to make sure that this Model 3 refresh is absolutely perfect. If you're focused on Tesla quarter to quarter, you just may lose sight of their goal of producing 20 million vehicles by 2030. Very few analysts on Wall Street can see them producing as many vehicles as Volkswagen or Toyota, when the company's aim is 20 million vehicles by 2030.
I noticed that you talked about the importance of trends, but we are seeing a trend of declines in EV sales, and this is just kind of the latest example of that. So if you are a long-term investor, doesn't a drop in demand that we are seeing through today's numbers start to scare you a little?
No, this talk about the drop in demand for EVs, if you actually look at the real numbers globally, the global numbers are actually quite promising. We are reaching a tipping level in many European countries, and we certainly reached that tipping level in China. Now, China's got its own economic woes, and that has an impact on sales in general of vehicles. And so, EVs will follow that path. But we are seeing globally EVs reaching the tipping point against ICE cars. So I don't agree with the general impression or the knock on EVs at the moment. I think we're going to see continued growth in EV sales, and we are seeing continued growth in EV sales.
The transition to EV is going to happen. It may take some people a little longer. They might want a hybrid in between. Some consumers are going to think all EVs are created equally. But in the long run, to see some real advancement in the United States for the adoption of battery electric vehicles, it's going to come down to price. That's what happened in China. That's what's happening in Europe at the moment. When Tesla addresses that pivotal under $30,000 price point, this EV demand nonsense, that's going to go out the window.
Actually, one of the more interesting takes you've got involves the stock in the news right now, and that is Tesla.
Yeah, Tesla is one that I haven't touched in 2024, Carl. I follow my own AI model for helping to pick the stocks to go in the portfolio. Been very bearish on Tesla, but interestingly, just in the last couple of days, it suggested now, the stock had bottom. It was ready for a run. Obviously, that was before the deliveries number came out this morning. And by all measures, it was a terrible number. I'm going to have to see, how the model reacts to that when we incorporate the data into it later today and into tonight.
I'm no AI model, but after that earnings call last time when Elon Musk said there'd be considerably less growth, I assumed that the stock may indeed fall to their 52-week low.
But it's interesting that the stock is still trading above its recent lows of about 160, 161, despite just a horrendous number. So my gut tells me, we'll have to see how it reacts in the next couple of days, but it might suggest that Tesla's hit a near-term bottom and it can start to recover in the coming weeks.
Dan Ives was pretty explicit today. I know he's still a longer-term bull on the stock. He called it a train wreck, among other things. How would you assess this?
Well, yeah, they sell expensive products. And that, I think even the bearish of estimates weren't thinking they were going to come out at, 387,000 vehicles. Listen, the way I look at it is this. In 2020, when they started the Gigafactory in Shanghai, that was a watershed moment. They were able to autonomously manufacture in the biggest EV market in the world, and that has helped grow their earnings and revenues and cash flow the last 4 years. What's happened, though? The Chinese competitors have copied them and have caught up.
I would agree that they've copied them. I don't know about caught up, though. If only we can get our legacy auto manufacturers and EV startups to copy Tesla.
And so now it's somewhat not existential, but it's like, how are they going to compete now in this very competitive market? And so I think that there's nothing to be excited about over the next 2 quarters, because this company is way too big as a market cap and way too mature for new investors or existing investors to add to the position when we know their earnings come out April 17th. I think they're going to have a bad Q2, and so we're just going to have to settle in here. But there's nothing to get excited about right now. And I think this is a good reminder, don't fall in love with stocks because they'll break your heart.
You buy more if the stock continues to slide? I said it's having a terrible start to the year. It's down more than 30%.
I like to sell calls. So half my position got called away at 220, which was, it went much higher than that. So that's my discipline. I'm going to see if it settles in here at 160. What I think I'm going to do is wait till after earnings, let the analysts bring their numbers down. But really, I want to see an innovation catalyst. And I have a Tesla. I use the full self-driving, but 95% self-driving and 100%, you can drive a truck through that. So I think it's going to be a rough year for Tesla. So I would wait probably a couple quarters before I look to add to the position.
That's a very practical decision from a very practical lady. She even owns a Tesla, uses the full self-driving. She's absolutely right. FSD at 95% autonomy versus FSD at 100% autonomy, there's still a lot of work to do.
Our next guest sees today's news as a test of investor patience.
You can say that again.
And Gene, you personally are amongst those legions of investors whose patience will be tested. So what are you waiting for?
Indeed. Melissa, first, I am bracing as someone who's been supportive of what Tesla's doing and optimistic about where this company can go. I was just stunned today. I think that this caught me off guard. I was expecting it basically to be flat. Deliveries is down 9%. And the first question I asked, first order of business, is how bad is it going to get? The panel's done a great job of articulating there's going to be more negativity. I just want to put that in a context, is that going into today, the street was looking for about 15% delivery growth in 2024. If you look at the numbers they just reported and assume that they can grow deliveries 10% sequentially for the rest of the year, deliveries will be down 3% for the year. So this is probably more ugly than it seems even today. And given that change and look what happened in the stock, I don't think that's fully priced in. So I think, Dan, you've been clear about that $100. I don't think we're going to see 100, but I do believe that the stock is going to go lower because this is going to be what I think is going to be kind of the kitchen sink, where you're going to see analysts, I had that job for a long time, throw in the towel and say that this is going to be over for a long time. So I want to start there. Second is the bigger picture. And I think, Tim, you were talking about just, this EV and the EV picture. Just to frame that in, that's a $2.5 trillion market. What's the auto market on a yearly basis? Eventually, of course, it's going to go EV. Panel appropriately talked about what's the timing of that. I think it's going to come faster than most people think, even though this is such an ugly day on the delivery numbers. And the reason is that I believe one of the biggest factors in this horrible number was that there was so much excitement around EVs. People who typically buy a car every 5 years probably moved it forward and bought it 3 years, pulled a lot of demand in. I think eventually that just starts. I'm guilty of being too optimistic, but I think eventually they get to the other side. And one final thought, Dan, you talked about FSD. I agree that that is an important piece here. If anybody's tried FSD, the beta that they just put out last week, it is a step function better than what they've ever done. And so I think that is going to come probably in the next year or two. And I believe that that's going to be another catalyst. So that's where I'm at. So you've got two camps. You've got the people who believe, and the reason why the stock's not down more today is because that camp still exists. The reason why this still has the market cap it does is because that camp still exists. They're not going to be influenced probably by another couple punky quarters. That won't influence it. The people who are skeptical, there's nothing that Tesla's going to say over the next, when they report their quarter on the 23rd, that's going to get those people more optimistic. But as an investor, I think you need to fast forward to, I'm already thinking about mid-2025. And at that point, we're going to have some really easy comps. I mean, this is a down 9%. March of 2025 is we're going to start to get easier comps. I think that starts getting reflected in the stock probably mid to late this year. So that's kind of the time frame. It's going to be rocky for the next several months.
All things considered, Gene is pretty spot on. I feel the stock has a little bit lower to go. 100 would be ridiculous, but I'll take it. The auto industry will turn electric. It's just a matter of time. I just believe people have a longer time horizon for this, whereas by 2030, I'm expected to see over a 75% penetration in the United States. And if you haven't tried FSD, you really need to find a neighbor with a Tesla or somebody with a Tesla and see if you can actually experience this for yourself. It's not complete yet, but I guarantee you it's definitely worth the price of admission. In conclusion, Tesla's delivery and production numbers disappoint, to say the least. A wide range of reactions from dystopian to optimistic, reality lies somewhere in between. And sure, you could chicken little it and think the sky is falling because this is a very poor quarter for Tesla. Chalk it up to demand weakness, the competition is coming. Or you can take a breath and relax. This is indeed a challenging time for the company, but for as long as I've been following it, and then some, the company has handled adversity admirably, tackling the impossible time and time again. Now, I'm not saying the quarter isn't bad. It definitely did not hit expectations, even my own. But one quarter does not a company make. Question you have to ask yourself, is this an anomaly or is this trend going to continue? And just like Gene said, there's nothing Tesla's going to say that's going to change either one of these camps. Either you believe in the company or you think the company's going to go bankrupt. That's all I got for you today. Be easy. Peace.